The 2010 NABE Economic Policy Conference is underway in the nation's capital. Hi, I'm Ed Highland for NABE TV. We're here bringing you video highlights of this year's conference, and we start with the chairman of the FDIC. Sheila Bair opened the conference with comments on financial regulatory reform. She said the FDIC is getting back to its primary mission of protecting the consumer.
What's needed now is fundamental reform in three key areas: ending too big to fail, plugging gaps in the regulatory structure, and finally protecting the consumer.
Bair also pointed out that efforts of the past have led to current challenges.
The irony is this: the very measures put in place after the last crisis to limit moral hazard in banking helped to push risk-taking outside traditional banking into the shadow sector. There, on the periphery of our banking system, where there were gaps between regulatory jurisdictions and inadequate protections for consumers, the risk grew unchecked.
Current financial regulatory reform proposals received mixed results in NABE's policy survey released today. Two-thirds of respondents believe the proposed financial crisis responsibility fee on large banks will not be favorable to bank customers. Nearly 46% of respondents believe a current plan tackling deposit insurance pricing would not improve the alignment of shareholder interests and risk-taking by banks. Prompted by the burgeoning federal deficit, the deposit insurance pricing plan would take into consideration the quality of senior executive compensation and board oversight. The director of the CBO talked to NABE members about how decision makers are walking a policy tightrope. Douglas Elmendorf said the CBO's projections show the level of debt will shrink from 9% of GDP to 3% by 2020 under current law. Within 2 years, we'd see the sharpest reduction in debt since the Second World War. But if tax cuts are extended and AMT is indexed to inflation, we'd see a 6% deficit by 2020.
CBO projects that the deficit and the debt are on a trajectory that pose significant economic risks and will become unsustainable. The United States is entering unfamiliar territory in the level of public debt. Unfamiliar to us, as I already mentioned, the debt will be larger over the next decade than it has been in more than half a century. We're also heading toward unfamiliar territory by the standards of other developed countries.
Elmendorf provided a lot of sobering numbers, including the projection of a 90% debt burden if more stimulus is enacted. NABE members were listening closely.
What struck me about his comments is I think we have actually more evidence and information that from other countries that have been in this situation, particularly developed countries, New Zealand, Canada, Greece, that have gone on this trajectory, so we have a pretty good idea of what happens and when. We don't really need to throw up our hands on that issue.
He did indicate that CBO has made some longer-term forecasts, particularly with regard to the impact of the entitlement programs. So as bad as the numbers look out to 2020, they're going to look even worse under present law when we go beyond the next decade or two beyond that.
And there probably will be some breaking point at which the two parties will have to be forced to work together, but I don't think we're at that breaking point yet. But when that arrives, it'll be a pretty powerful thing.
All of these policy decisions rely on the results of the midterm elections. The topic of a session moderated by Mesero Financial's Diane Swank. The bottom line, Democrats are in trouble.
There's no question whatsoever that this is looking really, really ugly for Democrats. And the only question is sort of how bad is it?
Cook said since a change in unemployment is unlikely and Democrats have lost the health care messaging, the only hope for the Democrats is the Republicans nominating what he called extreme candidates.
If you see establishment candidates winning some of these Republican primaries, winning most of these Republican primaries, but the Tea Party movement or their ilk start fielding candidates, independent candidates, splinter candidates in the general election that would be siphoning out of the Republican column votes.
The panelists agree that bipartisanship is key.
But at some point, the bond market, I think, is going to have to realize that there is a lack of seriousness on the deficit. And this lack of bipartisan compromise, I think, is going to have a significant impact on yields as we go into 2011, 2012, 2013.
A spirited panel gave thoughts on the question, will there be a productivity revolution in health care? Paul Hughes Cromwick from the Alterum Institute moderated a panel of Harvard University's David Cutler and the American Hospital Association's Linda Fishman. Cutler says the bigger hospital organizations are rapidly swallowing healthcare dollars and profits, hoping to drive smaller providers out.
Bigger is more profitable, bigger is greater ability to economize, to take advantage of economies of scale. Bigger is more bargaining leverage. Bigger is going to be a lot of things, and it will surely be the outcome in healthcare. Quite a number of my friends who are involved in policy would be very, very happy to see the single or the small group doctor disappear over the next decade.
Cutler says the revolution in healthcare will begin with reorganizing how it's distributed. He says up to 1/3 of healthcare costs are the result of waste. Check back with us for much more from the NABE Policy Conference, including comments from Christina Romer. We'll have highlights right here on NABE TV, sponsored by the Institute for Economic Competitiveness in the College of Business Administration at the University of Central Florida. For all of us at NABE TV, I'm Ed Highland.